Welcome back. You are with us on Bazaar Morning Call, and we're coming to you from the CNBC-TV18 Motilal Oswal studios. It's a roller coaster morning this morning. It's the Thursday tariff effect that's really playing out. Very quickly, let's pull up the Asian markets again. Still down between 1 and 3%. That's the reality of it. Let's also pull up the GIFT Nifty in the implied open to get a sense of where we could start, because Asia is down, like I said, 1% to 3%. Some of the markets have recovered a bit. The cuts are not as deep as, originally the Nikkei had opened down 4%. Now it's down about 2.75%. That is our implied open. 250 points gap down is where we'll probably begin the day. Beyond the tariff headlines, of course, a lot of individual stocks to track as well. Some because of the tariff news, some because of other news flows. So let's straight away get to our list of top stocks to watch. Guys, morning to all of you. Let me start first with Sudarshan, who's watching out for a bunch of auto stocks. I think some because of the sales news and others, I'm sure, because of the tariff news as well. Sudarshan?
So for today, majorly I have two stocks. First one is MotoCorp. I'm going with red on the stock despite companies reporting March sales, which are higher than estimates and are up 12% if you compare against the same month last year. But the reason the sales are higher because of impact has come in due to emission standard norm, which came into effect on April 1. And due to that, last week of March saw pre-buying. That's the reason these numbers are looking elevated. If you look at the Q4 numbers, Hero Moto has underperformed peers. Q4 growth, Hero Moto has reported decline, while all the other companies like Bajaj Auto, Eicher Motors and TVS Motor have seen a growth. So that's the main reason I'm going with red for Hero MotoCorp. Next stock is Bharat Forge. North America Class 8 truck orders for the industry are out. Now the orders have continued to see a decline. For the consecutive 3 to 4 months, the orders have been declined, and now the orders for the month of March have come in at a 7-month low. That is the lowest since August 2024, and these orders are down both month on month and year on year. ACT Research, the agency which publishes the data, they are mentioning several reasons of this decline in the order, and some of them are: first one is policy uncertainty, and second reason that there is a moderation in the economic activity as well. So these are some of the reasons that they have pointed out, and because of that orders are declined, and I'm going with red for both these stocks because of these factors.
Okay, all right. Thanks a lot for that, Sudarshan. Well, let's hop across to Mangalam. Mangalam, plenty of talk of what's going to happen to the US consumer. For the time being, Dabur's numbers indicate that the domestic consumer as well isn't doing too well. Dabur's numbers, volume numbers subdued again.
Well, that's correct. So a stock that I'm tracking today has nothing to do with the tariffs, but it's spooky nevertheless, and that's Dabur. Consumption in India hasn't picked up as per Dabur. In fact, they say that FMCG volume trends continue to remain subdued in the fourth quarter itself, and they are likely to see a mid-single-digit decline in the India business, as a result of which their consolidated revenue in the fourth quarter will be absolutely flat. And what are the reasons that they are attributing to this weakness? One is delayed winter, secondly is urban slowdown, and the third part is weakness in general trade, which has impacted their India business, as a result of which they'll also see 150 to 175 basis points contraction in the fourth quarter EBITDA margins. Now, what remains to be seen is it a Dabur-specific issue, or does this percolate down to the entire FMCG pack? Because over the last few quarters, Dabur has been underperforming the other FMCG companies, and the company has been promising better times, but not delivering them. Post the third quarter, they said that consumer sentiment has bottomed out. They'll only see improvement from here. In fact, post the second quarter also, they said that the second half will see mid to high single-digit revenue growth. That's not the case to be. So whether the street, ignores what the management has to say and react to what the management does is something we'll watch out for. For starters, the stock in the red today.
Got it. All right, Mangalam, thanks for that. I'm looking at Hindustan Zinc, and going with red more to do with what's happening in the globe rather than with regard to the operational performance. But the reason we're highlighting the stock is because of the quarterly operational numbers is what they've given. On a quarter-to-quarter basis, actually, there is an improvement. But otherwise, if you look at the saleable metal production, it's down by around 1%. The zinc production, that's down by close to around 3% on a year-on-year basis. And the lead production, that's marginally up. But because the headline number, that's a saleable metal production number, is still lower on a year-on-year basis, going with a tinge of red on this one. That said, let's hop across to Abhishek. He's tracking a few banking and financial names. Morning, Abhishek.
Morning, Nigel. So to begin with, some of the business updates of lenders have come out. PNB over there, weak business momentum seen. Deposit growth is at 14.3% YOY, but just 2.4% quarter-on-quarter. So quarter-on-quarter, it's the weakest growth that you are seeing in last 5 quarters. Domestic deposits are up 13.3% YOY and about 2.4% quarter-on-quarter. Advances growth are at 13.6% YOY and about 0.64% sequentially. So YOY is the weakest growth that you are seeing in last 4 quarters, and sequentially, quarter-on-quarter, it's the weakest growth that you are seeing in last 15 quarters. Domestic advances are up 13.2% YOY and about 0.6% sequentially. Calculation shows that the CD ratio, or credit deposit ratio, has declined both YOY and quarter-on-quarter. M&M Fin, now Q4 is supposed to be a strong quarter for them, but we are seeing weak disbursals over here. So disbursals are up just 1.2% YOY and down about 5.9% sequentially. The total assets are up 16.5% YOY and about 3.8% sequentially, suggesting that the tenure of the book might have increased. Now, Stage 3 has improved by about 23 basis points quarter-on-quarter. Stage 2 has improved by about 80 basis points on a sequential basis. Collection efficiency has improved on a sequential basis, but has declined on a YOY basis to 97% versus 101% YOY and about 95% sequentially. Liquidity in the balance sheet has been showed up, so it's now at 10,000 crore, up nearly 10% quarter-on-quarter, and forms about 8.4% of the total assets. AU Small Finance Bank, they have met their annual guidance for growth. They had given out a growth guidance of 20% and they are at 19.9%. Robust deposit growth also seen over here on a sequential basis. Deposit growth is nearly 10.7% quarter-on-quarter. Advances growth is at 7.7% sequentially, while AUM growth is at 6.2% sequentially. The CASA has also improved over here. So overall, the CASA growth is at 5.5% on a sequential basis, but CASA ratio has declined as other deposits have grown massively. Back to you.
Okay, all right, got it. It's a bunch of financials. We'll watch out for how the stocks react to those business updates. Thanks for that. Let's move to Upasna. She's watching out for a few stocks, including, I think, BEL and Kirloskar Oil. Upasna, good morning.
Good morning, Surbhi. First up, let me start with BEL. Yet again, this stock will remain in focus today as well on the back of its order win. The company has signed contract worth 593 crores with Indian Air Force. This contract is mainly for providing maintenance services for Akash missile systems. Also, company has indicated that it has concluded negotiations with customers for orders worth 5,000 crores. Now, next up is Kirloskar Oil Engines. The company bags order worth 270 crores from Defence Ministry. The company will design and develop in-house speed engines scalable from 3 to 10 megawatt. While these engines will be mainly used for propulsion and power generation on the ships for Indian Navy and Indian Coast Guard. So all in all, these two stocks will remain in focus today. I expect both of them to open in green on the back of the order win.
Okay, all right, got that. Thanks very much, Upasna, for those. Let's get across to Vinny. She has a few names on her radar as well this morning. Vinny, good morning. Tell us.
Good morning. So firstly, we are just going to talk about Mahindra Lifespaces. Now, they have won a redevelopment order. This is for 2 residential societies in Andheri West. So yes, they have the premium location coming in. Approximate value of this redevelopment project is 1,200 crores. And this will be under the state's cluster development scheme. So yes, this is a partnership with that. And a big one coming in for the company. In the recent times, they've got a lot of new order wins as well. So in terms of the redevelopment side, as well as in terms of development projects. So interesting to watch out for Mahindra Lifespaces. We're expecting green here.
Okay, all right, got it, Vinny. Let's quickly then recap our list of stocks to watch. The ones that have positive news flow around them are Bharat Electronics, Kirloskar Oil Engines because of the orders, Mahindra Lifespaces, AU Small Finance Bank. These are the ones on the green side, but on the negative side could be Hero Moto, Bharat Forge, Dabur, Punjab National Bank, M&M Finance, and Hindustan Zinc.
Okay, all right, time to slip into a short break, but our coverage on Trump's tariffs continues on the other side. Stay with us.